Hello everyone, my name is Jeffrey Kennedy and welcome back to another episode of Market Academy. This week we're just going to have fun with price charts. I'm going to bring up a blank chart like this chart here. And if you'd like, go ahead and pause the video and just take a shot at either labeling the price chart or trying to identify what perhaps I might actually be looking at or what kind of excites me about the price chart. Okay, so whenever you see this kind of a price chart, what would you think? Okay, well, whenever I see this price chart, I pretty much look at this advance up from, say, early July here. That was a pretty steep move here. And then subsequent price action, of course, has just been very just kind of sideways to down. You can clearly see that. So, of course, I want to apply the Kennedy channeling technique here. Again, we talked about that a few weeks back. Remember, counter trend price action tends to be contained by parallel lines. So this move here is indeed contained by parallel lines. This advance clearly decisive. So naturally, I'm going to be thinking, okay, hey, that's wave 3. Subsequent price action is wave 4. Okay, so let's go ahead and put on that base channel here. And here you can see the base channel working to the upside. And then you might be wondering, well, hold on a minute. Look what happened here in price. We actually fell below the lower boundary line of the corrective price channel. Well, below the lower boundary line of the base channel. Well, yes, we did. Okay, remember, nothing works 100% all the time, but there is kind of a workaround I sometimes employ whenever I'm utilizing the KCT technique on a price chart such as this. Okay, so let's go back to the origin of the move. Okay, so I'm drawing the initial, or the way you would originally draw a base channel would be the low of the price bar here to your wave 2 extreme, and then just move your parallel up to the wave 1. So arguably 1 up, 2 down. Well, actually, I'm going to put wave 2 here, identify this wave 2 as a running flat. So 1 up, running flat, wave 2, 3, pull back in wave 4. Okay, now look what I do. Okay, so the base channel is originally drawn on the low here. Instead, I'm going to use the high of the bar. Okay, so I'm going to use the high of the low bar. Okay, so rather than utilizing, again, the low here, I'm going to instead use the high of that bar to draw my channel. Okay, so let's see what happens when we employ that technique. Okay, so let's take that off. Let's take this off. Let's take that off. Okay, and we're going to go from the high of the bar right here to our wave 2 extreme, which is right here. And now all of a sudden, look what happens. Okay, now you have, again, confirming price action of the presence of a third wave. And then also, too, remember the secondary value of the base channel trend lines is that they tend to provide support for a fourth wave pullback. And then if we want to, again, kind of elaborate a little bit more on the technique, we can also take that parallel and drop it down to that origin point here. So again, now we know where our significant trend line support is for this issue moving forward. So here's what it kind of looks like when it's all said and done. 1 up, running flat 2, 3, pull back in wave 4 right here. Naturally, 65.35 is going to be my critical support level. If wave 4 did indeed end there, and wave 5 is indeed poised to rally up to, say, 71.72, we have no business whatsoever back under 65.35. Okay, so this is, again, just a whenever you're working with the KCT technique, play around with it, have some fun with it. Again, it's a very valuable trendline algorithm, and again, all it simply does is it allows you to more confidently differentiate between motive wave structure, i.e. impulsive moves, and corrective wave patterns or counter trend price action. One more thing that I like about iShares Bitcoin, ticker symbol IBIT, is that if we take a look at our RSI stochastic page, remember, in an uptrending market, whenever you see counter trend moves in price, you tend to find RSI coming back and revisiting and finding support at that area between roughly 50 and 40. If we fall below 40 and maybe see a print of 38 or 37 and it's brief, meaning no more than 1 to 3 trading days or 1 to 3 periods, that's fine. I don't have a problem with that. But this pullback in price, RSI came down into RSI bull market support. So this is the momentum pattern of a counter trend price move. And then if we look a little bit closely at our stochastic on the bottom, you can definitely see some bullish divergence between the two little swing lows here that we see on the price chart. So what we're seeing with momentum here, utilizing our momentum tools, specifically stochastic and RSI, as we're basically seeing the same type of messaging offered to us by the wave principle. The wave principle says that everything we've seen since the high here on the 14th is a counter trend move, i.e. a fourth wave move, and it should give way to further rally back up to 71, 72. And what we're currently seeing here in our momentum is that, yes, this is indeed a counter trend move, and because of the divergence, most likely bullish divergence, most likely complete, and so we're going to be looking for the market to continue higher again up to that 71, 72 handle. Okay, now let's move on and take a look at another price chart. Petrola Brazil, I can't even say it. We'll just say ticker symbol PBR. Okay, so why would you think why would this catch my attention? Okay, well, welcome back. Two things caught my attention here. Number one, for those of you who are familiar with old school chart patterns, of course you know what a double top is or a double bottom. We have a double bottom in PBR. Okay. And that's not Pabst Blue Ribbon, by the way. This is PBR. So we have a double bottom. Okay. And then the next thing that I liked about the price chart here that kind of caught my interest was the decline that we've seen recently. That's clearly a three-wave price move. Well, as we know, again, when it comes to wave patterns, two of the three primary corrective structures we work with consist of three waves, either ABC of a zigzag or ABC of a flat. So and again, going back to what we talked about utilizing the KCT technique, counter trend price action contained by parallel lines tends to be corrective. Any kind of three-wave move you see is going to be a counter trend move. So we have a double bottom, a very reliable old school chart pattern indicative of a bottom. And then we have this movement to the downside here, which is clearly three waves. Okay, so and I kind of point that out here in this slide here. Double bottom, three-wave decline, three waves down. So what I'm kind of thinking here is I like the upside. Now, I'm not sure if we go up in five. I do know we're going to go up in five waves, and I do know that prices are going to exceed the extreme here. Critical support, again, easy to identify, 1185. There's no business, if this interpretation or forecast is on point, there's no reason for us to fall back to below 1185. Keep in mind, earnings come out, I think that first or second week of August there. So I'm looking up, and again, I'm not bringing into, this is what I call unchained wave theory, where I'm just simply jumping in midstream. I don't know what's going on in PBR on the weekly chart level. I have not spent any time doing wave analysis on the monthly price chart. I'm just starting with a price chart that I've never looked at or haven't looked at recently, and I see something I recognize. So I'm just kind of jumping in. Okay, it's kind of like walking into a movie, 30 minutes in after you missed the previews. Okay, so it's either 5 up and 3 down for A, B, and if that we're looking for a wave C price move, then as you well know, equality between wave C and wave A is the most common relationship we see within zigzags, and that's what this would be. So that would be targeting 1404. Now, if we're looking at a wave 3 rally, then at least we're going to get up to a 1.618 multiple, and that's where a lot of that structural resistance comes into play here. As you can see, looking at these prior swing highs, you have this area of structural resistance. That's what I call it. Those prior swing highs basically show you that, okay, hey, every time the market was, this would have been back in 2024, but every time we kind of got into that 1550 area, the market topped, reversed, rallied, failed, came down, rally, failed, came down, rally, failed, came down. So that would actually be a nice attractive area to actually look for if this is indeed a wave 3 advance. Either way, as we move into August, September, and October, I do like the idea, or at least into August and September, I do like the idea of further rally in this market. And who knows, maybe it's going to be the earnings, positive earnings, or earnings better than expected, that propel this issue higher. And again, as long as our critical support level of 1185 remains intact, I'm favoring the upside. So let's look at some, again, supporting evidence, because I don't like to simply hang my hat on a single technique, okay? Some of you might be familiar with that style of rock climbing called freestyle climbing. It's where you don't have, your little hooks and ropes and safety harnesses and anything. It's basically a bag of chalk and some tennis shoes, and you're climbing a rock face. Well, some of the rules, or one of the primary rules of any kind of rock climbing, is you always want to maintain 3 points of confirmation. That's where you have your ultimate safety. So that's 2 feet and 1 hand, okay? Think of it that way, or 2 hands and 1 foot. Okay, so when it comes to technical analysis, and I'm looking at my indicators and oscillators, it's easy to kind of like be Alice and fall down the rabbit hole, where instead of looking at 3 or 4 indicators, you're looking at 10 or 12 or even 20 different indicators and oscillators, because Lord knows there's thousands, literally thousands of different indicators and oscillators. So what I'd like to do, rather than being overwhelmed with all the technical stuff that we do as technicians, is I'm only really going to be looking for, say, no less than 3 tools, but no more than 5 tools. And also, too, it's important that the tools that you use are not redundant. Okay, so in other words, I don't want to be looking at 5 or 6 things all based on moving averages, because basically you're just looking at the same thing. It's a redundant system. So that's why I like the wave principle. That's why I like Japanese candlestick analysis, and that's why I like momentum. Okay, so basically those 3 things. And as far as momentum, kind of all the same thing, really. RSI, stochastic, moving averages, they all kind of measure momentum or various aspects of momentum. But what was interesting about this price chart here, this is PBR, this is my MACD page, but essentially what I'm looking at is the stochastic here on the bottom. And again, this is somewhat of a unique setting for the stochastic, as a 25.5. And again, I use this for essentially long-term trend analysis. But notice we are very much oversold on the monthly chart level in PBR. Very much kind of similar to where we were back in 2020, also too back in 2023. So let's keep an eye on this. Maybe moving forward, maybe this month or as we trade into August, we will indeed see PBR, that %K cross back above %D and actually clear the way for higher prices moving forward. Well, that's about it for me for today. As always, thank you very, very much, and I will see you tomorrow.